Hello, and welcome to Dividend Learning Channel. In this video, we will be analyzing an ultra-high dividend yield stock, Ares Capital Corporation, ticker symbol ARCC. Ares Capital is a business development company and has a stellar dividend yield close to 10%. Since its IPO in 2004, Ares has managed to outperform the S&P 500 and Business Development Company Index. Stay tuned as we evaluate the reasons why Ares Capital is an attractive stock to consider and possibly include in your own portfolio. Ares Capital is a business development company and invests in small and medium-sized companies to help them grow. To qualify as a business development company, a company must invest at least 70% of its assets in private or public U.S. firms with market value of less than $250 million. Similar to REITs, a business development company must distribute over 90% of their profits to shareholders, which results in high dividend yields. Before looking at financial metrics, let's see why Ares Capital stands out from the rest of BDCs. Ares Capital invests in 34 different industries, as identified by S&P, compared to BDC peer average of 26. The largest exposure at fair value is a mere 2%. Which is less than half when compared to that of its peers with an average of 4.1%. Top 10 investment holdings of Ares Capital are 12.5% of the total portfolio, which is again nearly half when compared with other BDCs. A well-diversified portfolio reduces the risk of the company and effectively to the shareholders. If an investment of Ares goes out of business, the loss will not have a major impact on the profitability and as a result, will not significantly have an effect on the dividends distributed. Ares Capital offers insightful information as to how it is superior to its peers when it comes to generating meaningful shareholder value. 10-year regular dividend per share growth is 26.3%, while the closest BDC has a mere 3.1%. 10-year net asset value growth per share is 14.7%, while other BDCs have negative returns. What is more impressive for Ares Capital is the fact that since 2004 and the IPO, the company managed to outperform the S&P 500 index in annualized cumulative shareholder total return. Ares Capital has around 13% annualized cumulative return, while S&P 500 index return was around 9%. Comparing the return against its peers, we see that the outperformance is even higher. Since 2004, Ares Capital is trading at an average price of around $17.5. Highest share price was just above $22 during February 2022. Share price has dropped significantly below the average price only twice. This was in 2008 with the housing crisis and in 2020 during the COVID outburst. Annual dividend yield over the last 20 years has been constant between 8 and 10%. Given that share price is not so volatile, the annual return to shareholders is roughly the annual dividend yield distributed. A return of 8 to 10% per annum is a very respectable return. Now let's look at some of the metrics of Ares Capital. Ares Capital has a market capitalization of $11 billion and has a 5-year average revenue growth of 12.56% that beats the 3 to 5% growth we want to see. Revenue growth for Q3 was 21.97% year-on-year. Despite the sizable increase, gross profit was down 2.88%. It should be noted that cost of revenue increased over the past quarter and is something we should keep an eye on. Revenue growth is a good indication to shareholders, but the earnings per share growth for the last 5 years was minus 17.68%. We'll discuss later in the video the reasons behind the reduction of EPS. Return on investment for the last 5 years was 5.71%. Despite the return being below our ideal 7% return, number is double than the industry average. Looking at all metrics regarding management effectiveness, it is clear that Ares Capital is above its peers as it outperforms industry average multiple times. Cash and cash equivalents of the company have been increasing steadily over the last quarters. In addition to increasing cash, the company has repaid all of its long-term debt in the third quarter of 2023. This might be good news, but it comes at a cost as the company partly financed loans repayments with issuing new shares. Issuing new shares means that the shareholding of existing shareholders is diluted. As a result, earnings per share have been reduced over the last couple of years. Dividend yield is currently a whooping 9.72%, which translates to $1.92 per share. Ares Capital average dividend growth for the last 5 years is an average of 4.13%. Increase is below the desired 5% we are aiming for, but let's not forget that the dividend yield is already high. From time to time, the company reduces dividend per share as can be seen from the table. During the last 3 years, there are 2 reductions of dividends by nearly 6 and 5% respectively. Despite the 2 decreases, current quarterly dividend is 48 cents and higher than nearly 40 cents in 2020. Dividend D grade, or safety score, is sitting at 38%, which indicates that dividend payments are at a threat. Dividend safety score is low due to the reduction of dividends on a couple of occasions, and also because free cash flow has been negative on a few occasions over the last years. Overall, dividends should continue to flow in the future, even with some trimming from time to time. Going forward, revenue of Ares Capital is expected to increase by 6.8% year to year, which is good news. Despite the increase in revenue, the company's upcoming earnings per share is expected to be 59 cents. That translates to 6.35% year-to-year decrease. What is more reassuring for us Ares Capital stockholders is that the business development company has a ZAX rating of 2. A ZAX rating of 2 is a buy now rating, indicating that the future prospects of the company are looking bright. One of the most common mistakes dividend investors make is chasing high yields rather than investing in good companies that raise their dividends. With Ares Capital, the high dividend yield is backed up by a solid business model that spans out for 20 years, and there is no indication this is a dividend yield trap. Based on past history, investors should not expect share price or dividends to increase a lot in the future. As already mentioned earlier, what investors should expect is a return between 8 and 10% on an annual basis. Looking at the overall picture of the company, it can be observed that management delivered strong results over the years. Past performance does not guarantee future results, but personally, I will continue holding Ares Capital in my portfolio. This is not a financial advice, and you should always do your own research before investing. If you have enjoyed this video, please hit that subscribe and like button so you do not miss the next video. If you want some stocks to be analyzed, please leave a comment below, and I would be happy to prepare a video. Thank you for watching and hope to see you soon.